All right, let's get started. Kelly,
All right.
away.
Hi, everyone. My name is Kelly MacArthur. I am an enrolled agent and tax preparer here at Elite Tax Partners with Nicole Albrecht. Today, we're presenting information about a business strategy or business system, you could call it. It is Profit First, which is based off of a book written by Mike Michalowicz. We go ahead to the next slide, please. So Profit First is a method to approach your cash flow management. And the focus on it is making sure that you are paid a profit ahead of budgeting for your expenses. So you're budgeting the profit into this cash flow management system. And we'll talk all about how that works. So for those of you who are not familiar with Nicole, I'm going to tell you a little bit about her. Nicole has overcome a lot of personal obstacles in her life. She was a struggling single mom at the age of 18, worked up to 4 jobs at a time to make ends meet. She is the definition of grit. If she wants to get something done, she gets it done. Nicole has been fortunate to have mentorship and coaching opportunities with some of the nation's top business leaders, such as Dave Ramsey and Mike Michalowicz, the author of Profit First. She's an active participant in our community. She's on the board of Rancho Damacitas and Community Mission of Hope, and does a lot of great things for single moms throughout our valley. Nicole has a vision to help provide hope and inspire change so that others learn to live modestly and leave a legacy to help change the world. So here I'm going to turn it over to Nicole. Just as we go, if you guys think of any questions, please pop them into the Q&A box, and then we will answer all of those at the end of the presentation. I'll see you guys in a little bit.
Thank you so much, Kelly. I appreciate that warm introduction. Happy to be here and happy to share Profit First. Some of you might be really new to it. So this is an introductory class to Profit First, but we are open to questions. So the presentation will probably take about 35, maybe 40 minutes, and then we'll answer all your guys' questions. So those that are using Profit First, please feel free to chat in and ask those little bit harder questions as well. And so we'll get started today. Society is addicted to axioms. An axiom is a belief that perpetuates throughout society, right? So if the prior generation says it's true, then our current generations think that it or assumes that it is true. And so if you think about kind of 300 BC, the society thought that the world was flat. And we now know the world isn't flat. It was scientifically proven, and then it took 200 years for society to actually start believing that the world was not flat. And so we think that way, that there is another axiom as well. Oops, why isn't there's another axiom, and that is sales minus expenses equal profit. And a lot of our business owners operate this way, and I did as well before I was introduced to Profit First. But this isn't true. I mean, mathematically, yes, it does make sense. But we know if profits come last, if something comes last, it is insignificant, and we want to change that. So SBA defines small businesses as under 25 million a year. And I assume that is most of us, if not all of us on this call today. They did a study, the SBA did, and they found out that 83% of businesses actually survive paycheck to paycheck or check to check, because some business owners can't even afford to pay themselves, right? This isn't right. And I'd like to eradicate entrepreneurial poverty, and Profit First gives us these tools to do this. So most of my clients do something that I tell them not to do, and it's, I tell them to look at their P&Ls, let's do budgeting, let's do forecasting, and I realize that as an entrepreneur, we're wearing very many hats, and there's some sense of anxiety when they come in to meet with Elite Tax Partners to talk about money. I'll say probably 92% of our business owners feel this way. So if this is you, don't worry, you're in good company. And so for 200 years, accountants have been telling clients to do it this way, to do forecasting, budgets, check. But no, our business owners do it. They open up their app now on their phone and they look at how much money is in my bank account, and then they make decisions on spending. So instead of keep going against the grain, Profit First teaches how to actually use this system, right? So if we're already looking at our bank account to make business decisions, let's put something in place that helps utilize this habit that we're already using. And so Profit First is very, very much behavior, right? And so we're teaching behavior and not logic. So instead of sales minus expenses equal profits, we're saying sales minus profits equals expenses. And I'm going to talk a little bit about why behaviorally this makes the most sense for business owners. So what exactly is Profit First? I like to equivalent it to a diet plan for finances. And so there are 4 key principles that we're going to talk about today, and we're going to often put them towards kind of like if we're on a diet, that's how our mindset is going to think. So the first one is using smaller plates. And so a lot of us who have ever been on a diet, I've always been told by my health coaches to use smaller plates. And why is that? Because we can't, if we're used to filling our plate up full, and I'm a Gen X child. And so what that is, we are always told to eat everything on our plate or we wouldn't get dessert. And so if it was a smaller plate, we can still fill up that plate and still feel like behaviorally we're eating everything on our plate. So fewer calories leads to weight loss. And in Profit First, smaller plates are dedicated bank accounts. And we're going to go over when you're first setting up Profit First, what those very first dedicated bank accounts are. And there can be many other bank accounts that you're using. We'll talk about that as well. So you're going to start with the good stuff first, right? If you've worked with a health coach before, they tell you that half your plate really should be your vegetables, so that you're eating the good stuff first. That allows you to feel full when you get to more of the carbs and stuff like that. And so in Profit First, this actually means paying yourself first. You're going to remove temptation as well. So if cheap foods are inconvenient, I can't have Oreos or ice cream in my freezer or my pantry. For me, I just think about it constantly. So in my pantry, you won't find any unhealthy foods. If I actually want a treat, I have to go out and get it, so it's less convenient. And then we'll talk about finding your rhythm. We call them waves. So don't wait till you're hungry to eat. You plan ahead to manage your hunger. And so Profit First in dieting it leads to a leaner, fitter, more profitable business. We all like that. So let's talk about those 5 foundational accounts. If we call these our electronic cash envelopes. So those of you who know me know that I am obsessed with Dave Ramsey and the cash envelope system. Financial Peace University, we usually teach it about 3 times a year to our community. Being elite tax partners in the last year, we haven't taught it. We've been teaching some other things, but we will develop and bring out a new financial peace class because a lot of our clients are asking for it. And so electronic envelope systems is much like Dave Ramsey's cash envelope system. And so when you get paid, you go for Dave Ramsey's Financial Peace, you go to the ATM, you actually pull out cash and you fill up your envelopes, expenses that you could control. So groceries, fuel, like we can't really control our mortgage or our rent, things like that, but we can control groceries, fuel, entertainment, meals, eating out, clothing that we're buying, things like that. So you would use your cash envelope systems for these type of expenses. That's how Profit First is as well. So we're going to talk about the 5 foundational accounts. These are the 5 accounts if you're starting Profit First that you start with. And so you have your income account. That's kind of like our big plate. We'll talk about that in a little bit. Our income account is where all the income comes in. And then at certain designated days per month, we divvy out from the income account into our 4 smaller accounts. And those are profit, owner's pay, that's your W-2 if you're an owner, taxes, that's where your estimated taxes are going to be coming out of, and then your operating expenses, that's everything else. So let's talk about your serving tray. This is actually if you're only using one bank account, usually we recommend that that's the account that you're gonna turn into your serving tray. The reason why is usually you have so much, credit card payments coming in and everything's hooked up to that one account. And so we want to have all the income coming out of this account. And then we're only kind of like Thanksgiving, right? When you're a host for Thanksgiving, the host typically serves Thanksgiving from a huge, beautiful plate, right? It's not just a free for all. Everyone jumps in and takes something for themselves. No, it's beautiful. And the host apportions to each person. So when there's a single checking account, everyone gets to eat from it and come on in. I'm saying that it should be for display purposes only. Money comes into this account, but you don't pay any bills from this account. But we use the smaller accounts that we apportion the food to, and then bills get paid out of the smaller plates. So our first smaller plate that we start with is our profit account. And yes, I am saying to pay yourself profit first. Business owners, you have taken a risk, something that's extraordinary. 97% of the population has not taken this risk. This is something that you have courage, you're courageous, you've gone out there, your blood, sweat, and tears, and you should be rewarded for that. It breaks my heart when I see business owners that are just slaves to their businesses and they're living below the medium poverty line. And so this is the profit first account. Pay yourself first. Our next account is going to be our tax account. So we're no longer going to wait till the end of the year, cross your fingers and pray that Kelly and Nicole can wave their magic wand and your taxes go away, right? We're actually going to save every single month, actually twice a month, into this tax account. And then once a quarter, when your estimated taxes are due, you're going to use funds from this tax account to pay your estimated payments. So this is common sense. We want to save for taxes, right? As business owners, especially if we were W-2 first and then we became an entrepreneur, a lot of times we're in this kind of constant catch-up mode to try and pay for your taxes. When you become a business owner, all of a sudden the taxes weren't withheld for us from our paychecks, and there's this large tax bill due, and then you're in constant catch-up mode with estimated payments that are due the same year your taxes are due. And very quickly, business owners that go out on their own and don't get that advice first when they set up are in constant catch-up mode. And then owners pay. We do know the IRS is starting to heavily look at W-2 compensation for S Corp owners. It has to be fair and reasonable. No longer can you pay yourself $6,000 when your business is profitable, $200,000 to save on that self-employment, Social Security, and Medicare tax. Owners pay is very important. And so besides enjoying the profits from your business, you should also be paid for your work that you're doing in and on your business. So you do have to pay yourself first. You are probably one of your best employees. So pay yourself first. And we'll talk at the end of this presentation about a new tool that Elite Tax Partner has to help figure out what that reasonable compensation is. Because the IRS, it's not black and white. It doesn't say if you're a contractor, you should be paid $75,000 a year. If you're an accountant, you should be paid $50,000 a year. There's nowhere that says that. There's actually a lot of things that go into reasonable compensation. And so we have purchased a tool that allows us to calculate this efficiently for our clients. Our other smaller plate is our operating account, and this is to pay all other expenses necessary to operate your business. This is the only account that you pay bills from. So profit, you're going to take quarterly distributions. We'll talk about that. Your tax account, you're going to transfer over your estimated payments, but your operating account is where all your utilities, your rents, your overhead, payroll, telephone, internet, all of that comes out of your operating account. So this is the account with the most activity. The other accounts will just have a couple of transfers a month. This one will have all your bills being paid out of. All right, so now that we talked about the main account, your income account, and the four smaller plates accounts, that's your profit, your tax, your owner's pay, and your operating. Let's talk about target allocation percentages. In the Profit First book, and if you haven't read Profit First, I highly, highly recommend it. Mike does a fantastic job, especially if you purchase it on Audible. He tells real life stories and puts some faces behind it so that it is really easy to understand. He talks about these target allocation percentages. And so here are the different revenue, and real revenue is a term that Profit First uses. If you're a service-based company like Elite Tax Partners, real revenue is our gross revenue, what comes into the company. If you're a business owner that sells products, real revenue is actually after your cost of goods sold. And so for most of us on this call, service-based companies, real revenue is going to be what you make. And so in this column here, column A, we have, if you're just starting out all the way up to 250,000 a year, your real revenue range, here are your profit allocations. So real revenue is, what's coming in, that's 100%, that's what's going to go into your income account. And then these are the allocation numbers that we're going to try and achieve, right? And so profit, 5% goes into profit. Owner's pay, you're paying yourself 50% of what's coming in. Tax is about 15% that we're suggesting. And of course, we're talking to large populations. And so we can help tweak these and set it up according to actually your business specifically. And then operating expenses, if you're a $250,000 business or below, operating expenses should be 30%. And for most of us on this call, that is a very low number, 30%. Most of us are operating at about 75%, and we'll show you how to achieve that. And in the other columns, you see the other real revenue ranges. And I think for this presentation, we're actually going to talk about 250 or below in real revenue. And so this is just kind of visually what we just talked about. So the 250,000 comes into your large income account, and then it gets apportioned out 5% to profit, 15% to taxes, 30% to operating, and 50% to owner's pay. All right. So this is just another slideshow that's kind of talking about the same exact thing. And let's talk about Parkinson's law now. So the concept of Parkinson's law is leverages the behavior of the make do with what you got. And I'll share a couple of really good stories about this. But really, if our demand for resources, we increased our supply of it, and that's what we're. And that's why if we're given 2 weeks to complete a project, it will actually take us 2 weeks. If we're given 8 weeks to complete the same project, it will take us 8 weeks to complete that project. The more we put something in front of us, the more we will consume it. This is how humans behave. And so for Parkinson's law, I have a couple of great stories. I have a client who has a hard time savings. He recently got in a auto accident and didn't have proper insurance coverage. And because of this, he needed to fix his truck. He's in construction. He needed $15,000 to fix his truck. Insurance wasn't going to kick in because he had paid for his truck in cash, which was great, but he didn't have the right insurance on the truck. And so within 4 weeks, he said he's never been able to save $15,000 so fast. But because he had 4 weeks to do it and he was out of truck to make money in construction, he got super creative to find that $15,000. He started selling things on OfferUp. He took odd end little jobs. He worked 65-hour weeks to get that $15,000 so that he could get his truck fixed. Meanwhile, he borrowed his friend's truck, which was a rundown old ice cream van, and cops kept pulling him over for that. And so he really quickly wanted to get out of that situation. Well, that's the definition of Parkinson's law. You make do with what you have. If things are really tight, you get innovative and you figure out how to get things done. I know that Mike in his book, Profit First, likes to talk about the tube of toothpaste. So in the beginning of the month, you buy the brand new tube of toothpaste, and you're pretty sloppy and generous with the amount of toothpaste that is on your toothbrush. But towards the end of the month, when that tube of toothpaste looks like that on our screen right now, you get really creative. If there's a plop in a sink, you might decide to pick it up with your finger and put it on your toothbrush, or you might cut open the tube to get the last bit of scoop out. And so that is actually the definition of Parkinson's law, right? We're getting creative, frugal, innovative, to make the most of what we have, right? And so we also like talking about sequences, and sequences is how things are presented to us dictate our use of these things. So think about the sequences with going back to our kind of diet example. Veggies are usually eaten last because most of us think vegetables are gross. I'm actually learning to like them now, but actually you should eat vegetables first. They're high in fiber, they fill you up, they're good for you. And so we're telling you to take your profit first, but there is temptation, kind of like the chocolate chip or the Oreo cookies that we talked about. You try and use your willpower, but we all know willpower is much like a muscle and it starts to fatigue, right? The day comes where you can't pay your bills. So what you're going to do is you're going to end up looking at that profit account that you set up for yourself, and you're going to end up transferring the profit over to your operating account to pay your bills. But you can't steal from yourself, right? This defeats the system. And so we're going to be talking about why it's so important that profit first account, a lot of times we recommend that it's even set up at a different bank to make those transfers back and forth almost impossible to do, right? We want to be able to look at our operating account, and when it's tight, we need to make some really, really strong choices and tighten up the belt. Or hustle our butt and figure out new ways to bring more income in, right? That's the two ways. You either spend less or bring more in. And if we just take the easy way out by getting a line of credit or going to our profit first account and borrowing from ourselves our future profit that we're going to be taking, we're defeating the purpose of profit first. It's not about transferring things back and forth. That's not using the system of profit first. That's just making your bookkeeping a nightmare. If something's not accessible, we don't use it, and we revert back to the make do with what you got. So going back to my client and the example with the truck in the shop, he figured out how to get that truck out of the shop as fast as he could. So let's talk about peaks and valleys. One of the things, and this is different and customizable for every client, but in the Profit First book, Mike talks about the 10-25 rule as trigger days. And this is when we actually do our allocations. And so there's two reasons why we do our allocations. The first reason is that bills are normally due on the 1st and 15th. So it gives us those time frames to allocate from our income account to our operating account, and then to pay those bills when they're due. And the second reason is it starts actually forming these wave patterns. So I like to talk about this as, it's summertime. I love summertime. It's my favorite time of year. And a lot of times you put your chair close to the waves so that the waves kind of splash your feet when they come in. And you get to feel this kind of standard norm, right? When the waves are short, you have to pick up your chair and kind of walk it towards the ocean, right? But when the waves are long, you notice this and you pick up your chair and you kind of scoot a little bit back. What do you need to fix? What do you need to replace? This starts forming wave patterns. Maybe there's only 10,000 coming in. Normally it's 25 grand. You start investigating it. What are the red flag moments? Has something changed in marketing? Has Google changed its analytics? Are you not speaking out in the public enough? Maybe you're not taking your referral partners out and telling them what you do best. These are the red flag moments. You can identify these changes in expectations with cash flow. So a lot of times when I meet with clients, and again, this is 92% of the clients we meet with, Kelly and I will say like, wow, you had an amazing year. You made $80,000 more this year than you did last year. How does that feel? What did you do with that money? And the common response is, I didn't even know that. I don't know where that money went. I didn't know I made $80,000 more. Or the opposite. Wow, it was a really tight year. You did a great job managing your budget this year. I noticed you didn't borrow any money, but you made $60,000 less. How did you manage to do that? And again, most of the time the client says, well, I don't really know. I know things were a little bit tight, but I didn't know I made $60,000 less. I guess I just got a little bit more frugal and I learned how to manage the money better. So when we develop these trigger days where we're actually moving money out, you will see it and you'll be able to make adjustments quicker rather than in April, when you come to see us, know that you lost money or made more money. And so again, we call these trigger days. The 10th and the 25th is when we move our money. But sometimes people like to move their money weekly. It really depends on the business, and this can be customized. This is the general rule of thumb. And so now we get to talk about profits. So profit account, this is used to celebrate. So again, we like to put our profit accounts at different bank accounts so that we don't borrow and transfer the money back and forth. You don't want to plow back or reinvest it back into your business. You're training yourself just to kick that can down the road if you do this. You're avoiding the call for innovation, efficiency, and frugality. And so that's what we want to do. So I'll share a personal story. Many of you know that we had a very good split from our previous tax firm that we used to work with. And it was just time, visions changed, and it was all good. And so we were doing profit first over at that tax firm. I met Mike probably about 10 years ago. I was fortunate enough to meet him. Dave Ramsey had him speak on stage at a huge event that I went to for Dave Ramsey. And then Mike took the accountants that were there out to a dinner and started telling him about this concept. And then quickly we became Profit First coaches, certified in it, because we just thought it was a great idea. And we wanted to run our accounting firm that way. So we were using Profit First that way and did really, really well. Well, when we broke off from the old tax firm and created Elite Tax Partners, we only did one bank account. It was always the intention to deploy Profit First in our business. But in the beginning, we had 7 weeks. Our plans had changed from the year goal that we had. We had 7 weeks to form the new corporation. We weren't going to be taking over the other one. And so one bank account got formed. And in December the following year, because tax season had been so great, we had profits, but we hadn't separated them out from the bank account. And we threw some big parties for our referral partners, we had a huge celebration for the team. And I kind of forgot about the new tax rule that you could pay your California pass-through entity tax to the company. That was rather large. Our software bill was due, and I kind of forgot about that. That was about $14,000. That was rather large. And there's a couple other odd ends we needed to staff up in January. And so because I, in Elite Tax Partners, wasn't doing Profit First, if I had been doing Profit First, I would have known about that. And I would have been able to tighten our belt a little bit more during November and December to take us through so January wasn't so rough on us. So now we are using Profit First. That was very important to us. We are saving. We've created some extra accounts. One of our goals is to purchase a commercial property in 3.5 years. So we're also creating an account to save for that. So these are just some of the stories of Profit First, why it's so important. I didn't get innovative, efficient, or frugal because I didn't see the wave patterns and I forgot about some hidden bills. I was literally doing what I told clients not to do. I was checking our bank balance and what was in QuickBooks, and I wasn't thinking about upcoming bills.
So my question is, we're an S Corp, and I'm wondering as far as, because we have some savings set aside, but I was actually recently thinking that maybe we should put some of our savings into a mutual fund. Is that recommended?
So what I usually like to talk about is for business owners, especially business owners that have a team and have payroll, there really should be at least 3 months of operating expenses in that operating account to feel comfortable. In case another, God forbid, shutdown something happens where you're gonna have to go to that account. So we love saving and we like mutual funds a lot, or even EFTs. It's a cheaper type of mutual fund. For savings, that's a great idea. As long as you did have that kind of 3 months of cushion in your operating account, you can definitely get that. The reason why we wouldn't recommend saving your 3 months of savings for the business in mutual funds is because if you looked at when COVID hit, March of 2020, and Reed, I know that you guys got affected by this big time in LA. Not only could you not make money, but also the stock markets crashed. So if you had that 3 months savings in mutual funds, all of a sudden, maybe that 30,000 would now be about 19,000 and you can't make any money. And so if it's certainly savings after the 3 months is saved, then yes, we would recommend looking into that. We also have a certified financial planner here. We have 2 of them on our team. If you have any questions about that, can certainly pair you up with a complimentary phone call to discuss that more.
Thank you.
You're welcome.
Nancy Barrick has a question. She says, since you recommend having 2 separate banks, is there a bank that you recommend to open a second account at?
Yeah, so Nancy, I do know that you're in a different state than California. In California, we recommend and love Cal Bank and Trust. It's actually right down the street from our office. The reason why is because they don't, for our clients who are using Profit First, as long as we talk to the bank manager, they don't charge our clients those bank fees, the monthly fees. Because sometimes it's like, well, if I'm creating these 5 accounts from Profit First that you suggested, I have a $10 fee on each of these accounts. This costs me $50 a month. Whoa, no, we don't want that. We want to have banks that work with you. So Nancy, I do know that Profit First has nationwide banks, and I'll personally email you, let me write that down, the name of those banks so that you can make sure that you get on that in Idaho. So Nancy, thanks. So I'll send you a personal email, Nancy. And if anyone else has a question on that, shoot us over an email and we'll make sure that you guys get that as well.
Nancy asked, what about credit union?
So a lot of times I love credit unions, but credit unions don't work well with business owners. Most of our credit unions won't even open up a business bank account. So it has to be a personal bank account that corporate clients call their business account. But if you love your credit union and they're willing to work with you and open up these accounts and not charge you the bank fees, then great. I would use the tools that you're already using and that you like. All right, Kelly, did you have anything to add? Anything that you wanted to talk about?
I think that my advice would be, if all of the accounts seem overwhelming to you, you can start smaller. You can start with a profit account and start setting that aside and build. You don't have to jump all the way into this if you feel like that's going to be overwhelming. So you can do it in stages if that's going to make it work for you. As a thank you for participating in our Profit First webinar, we have a few special offers for you today. We offer bookkeeping service here at Elite Tax Partners. Our pricing starts at $350 a month. If you mention code Profit First, we will include with your bookkeeping service a one-time Profit First coaching session for free. We also would like to offer you a reasonable compensation report. This is to help make sure that you're paying yourself the correct salary that will pass the IRS examination. The cost to complete this report is normally $1,200. If you mention code Profit First, we will discount this to $400. You can take advantage of these special offers by sending an email to admin@elitetaxpartners.com. Again, thank you for participating in our Profit First webinar.
All right, guys, excellent. Thank you so much for joining in. Again, we will post this to our YouTube channel. So if you wanted to share it with anyone or go back and refresh yourself, and we are here to help. Thanks, guys.
Thank you.